or so, and there is a target, 182. Looks like the number that would be way above.
It is way above. That is the number. Check it out. Just like its fellow retailer that we've already heard from, Lowe's earlier this hour, Target beating estimates on both the top and the bottom line. In fact, Target earned $1.82 a share. That is a clean number, and it's 20 cents above what the street was expecting. Comp store sales up by 3.4%. That's really strong, too, because a year ago they had comps that were up 6.5%. So with comp store sales, you're always talking about what you're up against. Over the course of the last year, that's almost a 10% gain in comp store sales.
Further evidence that the American consumer and that our economy is on fire. And I will say one thing about execution on this company. I do business with them on a wide range of consumer products. If you compared the teams you meet with now versus 5 years ago, completely different crew. Hipper, younger, digital, social media, all the things that they needed to do to solve for being old and stodgy.
They got that Target cachet back.
They got the Target's back,
Yeah.
and they've got a really hip management team there. You can feel the energy when you go.
Orange watch bands, things like that. 590 to 620 on the outlook for the year. 593 is the estimate, but they already beat by 20. And then
I would say that's being conservative, probably, because what they're doing is raising guidance, but only to take into account what they've already beat by with this quarter.
Revenue is also above. I don't think we mentioned it. 18.4 billion versus 18.34.
They're killing it. Those are fantastic numbers.
But again, if you put this together with what we've heard just over the last 4 trading sessions or so, Walmart came out and beat expectations handily, raised guidance for the quarter, even with what they look at. They say the consumer's in great shape. Hear the same thing from Home Depot. Hear the same thing from Lowe's. You hear the same thing from Target. That tells you that the American consumer is doing very well. And now it may depend on where you are in retail.
And tariffs are not affecting their decisions on buying yet.
At least for the big guys who are able to source all over the place and can be nimble and can move. These are the companies that would be less hurt by the tariffs because they have more flexibility.
I'm happy to see it. I think it's terrific.
Check that out. That stock is up by 5.5% right now. It's a gain of $4.78 to $90.31. And again, the latest of the big retailers that we've seen just kind of knocking things out of the park.
Same store sales, too. That's the next in the prompt. 2.9 was the estimate, and I think they did, what? 3.4. So that was
3.4%. And again, that's against tough comps from a year ago, when they were up 6.5%, so building on strength.
Well, Home Depot said that you weren't going to necessarily see the tariffs impact what they did with pricing, et cetera, but that the consumer herself, actually, is what we said.
Home Depot himself.
Lowe's herself.
But themselves.
No, but not even supposed to use the.
not use any. We don't even have to decide.
But then you have to say consumers.
But even Home Depot, when they warned, we're not saying it was going to be in the results themselves of the prices. It was going to be dampening consumer sentiment, and
we're not there yet.
Have you seen it yet?
No. But here's the secret sauce that hasn't even come into the mix yet. You've got 1.5% on the 10 years. So let's say you're refinancing your home at 200 basis points over LIBOR. You're getting a mortgage now and pulling out equity again for under 400 basis points.
Which is amazing for these home retailers.
And
like
it hasn't even started yet. So when Trump pushes to get rates even further down, he's basically fueling the consumer to continue this extraordinary run.
But do we need it? Or do you need to save that firepower for
later?
I'm
a fan of saving the firepower, but the point is there's some really good news coming in refinancings of home equity into Q1 and 2 of next year while
even
the tariffs
without additional cuts, I think. Even without additional cuts, you're going to see people start to refinance.
It helps you take the tariff hit in costs, which are probably going to come. We got to keep squeezing. We can't give up on the Chinese.